Thank you very much for inviting me to come and speak today. The Credit Services Association is the sort of national trade body, a trade association, for debt purchase and collections agencies. And we've got around about 150, 160 or so collections firms from across the UK, all shapes and sizes, big ones such as Coeo, small ones that are very regional or local based. And so this is the bit of the day we're going to talk about specifically the collections sector. And I've been sort of asked to talk about trends, challenges, opportunities, hot topics as they might pop up. So I'll try my best to cover those off. Though Dennis obviously had far more exciting slide pack than I've brought with me today. I haven't been doing my motor racing. I haven't run off a road recently. As you say, anything can happen as the day progresses. Unfortunately, the seating will completely scupper one of the key first slides that I've got. Actually, wait a minute, let me just check, because I thought I had a slide in before this. I did have a slide in before this. The first thing I wanted to do was just quickly give you a snapshot of what we see talking to all the collections agencies across the UK and how things are working. And it's not inconsistent with Dennis's message earlier. It's a relatively stable market at present. There's a bit of change going on because obviously a lot of our sector is funded through wholesale finance, private equity, internationally and so forth. And there's, like there is in a lot of different countries, quite a little bit of consolidation around the edges, companies merging, acquiring different aspects within that. But by and large, the market is pretty stable. No great, disasters or sugar rushes or pitfalls happening in that. But there is quite a lot of change when you lift the bonnet for how collections works going on in terms of the operations of the sector. And a lot of that obviously is driven by technology. There's some big changes obviously happening in terms of the data-driven approach to collections, and we'll talk about that a little bit later on. Quick vital statistics really of the membership that we have, of what's going on in the collection sector. By and large, most of the traffic is in the consumer credit side of things. Most of our members are dealing with consumer credit by and large. Quite a big chunk of utilities collections, a smaller chunk of public sector, but obviously we've got commercial collections members too, but a lot of the chatter tends to focus very much on the regulated side of things, which is obviously the consumer credit aspects. We reckon there's about 40 billion or so of consumer debt managed in total by all of our membership, around about 3.5 billion of which is collected on that sort of drumbeat each year. On the collection side, about 10 billion of commercial debt held, about 1 billion collected by our members. And in terms of the debt purchase sector, buying books essentially from creditors, we think there's around 6 billion of debt by its face value purchased roughly, well, the last full year for which we have data is 2024, but it's probably going to be similar to that when the next set of market insights information comes out. Now, around about 10,000 people are employed in the collection sector. As you'll guess, most of that is in call centres dotted around the country, actually pretty equally spread around the country, not one particular sort of location for that. Most of whom are in the frontline side of things, but because it's quite a heavily regulated sector as well, there's quite a few who are in the back office side of things, dealing with compliance and regulation, the legal side and so forth as well. So a reasonably sized industry. That sort of aspect of financial services doesn't actually get talked about that much in the sort of Financial Times and the big national media, but it's really crucial to keeping the credit cycle flowing because, of course, as we know, if you don't get the collections bit of it working, then the creditors can't offer fresh, affordable and available lending as much to as wide a number of people as we need. So back to that story that Dennis was talking about, the growth engine of the economy, we need to bang the drum a little bit more loudly about how the collections and recovery cycle is really quite crucial to supporting that consumer economy and economic growth more broadly. About 46 million accounts managed across our membership. In terms of how many complaints that are generated by that, actually relatively small number. I think it's 0.23%, and in terms of, we have a code of practice at the CSA also as well. That chimes pretty similarly to the Financial Ombudsman Service experience of how they assess complaints coming in, and the uphold rate roughly going about sort of 30-31% at present. So that's sort of the snapshot of the statistics from the sector. Now let's see if I can move this forward. Here we go. Yeah. I'll keep that one up because it's the same thing. So I hate to tell you this, it might not be that our sector is universally loved by the wider British public. I know that will come as a bit of a shock to many of you, and maybe the public are wrong on this one. In fact, they're definitely wrong. We should love the sector a lot more than it is loved. But sometimes we get a little bit shy about working in collections and recoveries. As I say, there's a purpose to the sector that is actually very virtuous in terms of keeping credit availability going more broadly. But actually, when we've done some opinion polling, we used Opinium, where they sort of take a random sample of the, actually a weighted sample of the British public, about 2,000 people. You do questionnaires, and you ask them some really sort of fundamental questions. The first of which is, do you think it is reasonable for people who miss payments on the money they owe to be contacted by a debt collection agency? The vast majority don't object to this situation. In fact, most people by and large will agree with that. But there's a strong sentiment, and it's important for people to realize this, of people who on principle think if people owe money, they shouldn't be contacted about it. Now, that's quite just a little bit of an insight into the, I mean, maybe this is more of a political question than it is about a sort of purely data question, but it's important to know that actually there's a silent bunch of people, majority of people who actually think it's okay for the sector to exist and to do what it has to do. So maybe a grudging acceptance, you can sort of say, amongst the British public. We then asked the question of those who are encountering the sector. So they're being asked when they're being contacted, outbound calls, or even through correspondence and so forth. Well, what was the level of professionalism that you encountered in the sector? This isn't related to one particular company, although this is across the whole side of things. And you can't see what I can see on the screen in front of me, which is actually, again, most people actually had a fairly positive view about the professionalism they encountered. Many of you who've worked in this sector will know, if you've listened into calls as they come into, to call centres and so forth, people can be quite wary of the conversation they're about to have. They'll be a little bit worried about, are they being chased and so forth. And actually, they'll find often, more often than not, a very friendly person who is pretty schooled in how to have those conversations, who will walk through in a very particular, meticulous way, what are your circumstances, maybe doing an income and expenditure assessment, and you get quite surprised customers at the end of that process saying, actually, I found a human conversation, it was very positive, it was constructive, it signposted me to support and debt advice, free debt advice as it was necessary. And so actually I wasn't surprised when we found quite a big chunk of people who said it was an excellent or good experience in terms of the professionalism they encountered. Look, you're not going to always find people, as I say, popping corks or running down the street with glee that they've had an engagement with a collections agency. But it is, as I say, it's not as bad as perhaps you might fear when you sometimes read the media or you see some of these things. So that professionalism metric is something we like to keep track of as the trade body. It matters to our sector, and I think we've got a reasonably good story to tell on that. As I say, there's a lot of regulation in this sector, particularly on the consumer side of things. It is a very well-regulated sector. We didn't always have things like the Financial Conduct Authority, before that the OFT, the CSA's Code of Practice. Obviously, it was layered on top of more recently in the past decade with the advent of the FCA as it comes along. But there's a lot of scrutiny of what goes on in the collection sector. And it's not just by the regulators, but by the client side as well. Clients also, because the creditors are regulated themselves, they want to have a deep relationship with the contractor, with who there is purchasing their debt or who is servicing their debt. And so actually, our experience is that there's a lot of scrutiny and a lot of attention. And I think that is sort of borne out very much in terms of the level of complaints that come in and the uphold rate, which compares really favorably with a lot of the rest of the financial services sector, by and large. There are some marginal issues, but by and large, that's the sort of aggregated experience. There's also a lot of sensitivity to the vulnerability question, which has been much more to the forefront in the past decade as well. The model that we have with either debt purchase or collections is that, and I think, again, a lot of the members of the public who ring up or will sometimes approach their creditor or collections agency with a little bit of trepidation. There's often quite a lot of surprise, particularly when it comes to private sector consumer credit, that there is forbearance available, that you can often look for, rephasing of your payments, or different settlement amounts and so forth. Now that actually isn't always the experience when you talk about the public sectors, the debts to the public sector. Council tax has been in the news recently, but lots of others, HMRC, DWP, often because they're recurring debts, they don't necessarily have the same, I suppose, generosity when it comes to the possible forbearance that could be offered there. So whilst you might get policymakers, national government and regulators who will really bear down on the private sector, private financial services sector on these things, it's important to just sometimes take stock and just say, well, actually, the private sector is pretty generous by comparison to how the government themselves are when it comes to relationships with those in an indebted situation. Now, perhaps the biggest regulatory change that we've seen in recent times was the announcement by the FCA of the sort of consumer duty. Many of you will have consumer duty sort of tattooed at various points across just to remind you consumer duty, and I'll test you all on the various principles of consumer duty later. But of course, we haven't simultaneously seen the repeal or the changes in the very black and white statutory legislation-based Consumer Credit Act, which is pretty much the same age as I am, which is obviously very young, but the CCA, the Consumer Credit Act, is due for reform, and the government have very slowly been walking through some consultations about what they can do on that. The CCA is the one that insists thou shalt send out statutory notices with all those various pieces of paper, the nosiers and the snosiers, costing a fortune and very rarely, if ever, opened or read by the poor, unsuspecting, baffled customer who's receiving these things. I even think when the FCA tried to bodge a solution to this by saying, well, you can envelope the statutory notice with an explainer that basically says you don't really need to read this stuff. I mean, the whole thing is a complete joke. And that's where a lot of the costs of compliance also add up as well. So hopefully we're going to be seeing a move away from that, a modernization in terms of the channels of communication that collections agencies and others are going to be able to contact and communicate with customers. But it is so slow. And a little bit of politics here. My sense is that, a government slightly reeling from all sorts of other political issues right now, how likely is it that they are going to bring forward a piece of primary legislation on consumer credit reform, drop that into the House of Lords and the House of Commons, when there's lots of angry MPs who might look to amend it all the way along the process? Let's put it this way, I'm not going to hold my breath for CCA reform in the immediate future, but it is promised. The difficulty this means is that you and others in our sector are having to work with two completely different regulatory systems. One is the consumer duty, which is very values, principles based. I always like it feels a little bit gelatinous in many ways because it's not clear really where the Financial Conduct Authority might intervene if they're going to do that on a consumer duty basis. In fact, they haven't really used consumer duty in sort of many enforcement cases so far. And they'll say, well, you might go to them and say, have what we done is it right or is it wrong? And they'll say, well, that's for you to make a judgment about under your consumer duty obligations and understandings. But at the same time, the sectors, and this happens to apply to creditors as much as it does to collection side of things too, you've still got those black and white legislative rules under the CCA to abide by at the same time, and those will often be taken to the Financial Ombudsman Service and the things that are complained upon there. So these two worlds, these two different paradigms of regulation are pretty incompatible, and there's a big debate about how this is going to change. So that's one of the things keeping us busy as a trade body. There are lots of other things keeping us busy as well. There is a big regulatory conveyor belt that, for those of you old enough to remember Bruce Forsyth in the Generation Game, you try and watch the belt as it comes past the magic window, see if you can remember what they are. I mean, I just listed a few things that are sort of in the air right now. Big changes to SMCR that have come through, some of which are welcome because they're sort of lightening the load in some respects. Change with the Financial Conduct Authority starting to look very closely at non-financial misconduct. Well, that's more about the behaviors of you and your teams, and that's a bit of an unusual one because you might well ask, well, what's a lot of this got to do with the FCA? But they've had a lot of flack in some quarters, particularly in the banks and elsewhere. So non-financial misconduct, NFM, another little acronym for you to remember. The Financial Ombudsman Service itself is due for reform. We're all awaiting the review that the government's been doing this past year on that. Just to give you a little bit of perspective, if you think the Financial Ombudsman Service is a tiny little branch office somewhere in, wherever it may be, they've got, I think, 2,000 staff. They spend £251 million in terms of the revenue, and this is a vast operation. Some might say, including me, way too big, way too expensive, and needs a significant reform. But they're coming up with all sorts of other changes. Also, one thing being floated is differential case fees that will come up. So they might start charging you different amounts depending on the stage of the complaint as it goes along, rather than just that one-off block of 750 quid. I also think it happens to be a really badly designed process where even if your firm is entirely innocent or guilty, you still have to pay the £750 regardless. To me, it is the wrong way around. But we make these points in some of the representations we give to the FCA. Other things on the big changes coming in terms of data regulation, the creation of the snappily titled Credit Information Governance Board, which is also looking at the questions we were looking at earlier in terms of credit score reform and how those might become perhaps a little bit more sophisticated, a bit more usable by many of you over time. Product sales data, so more data requests coming from the regulator. We've got the personal insolvency review, is bankruptcy, IVAs, all of those things, DROs, are those all going to be changed again at some point? That's in the air. And then, of course, you've got other legal events that pop up as well. That minor issue of motor finance redress scheme, which the FCA are about to land on a lot of us when they conclude their policy imminently, we're told before the end of March. And that's going to potentially have some big ramifications as well. And other things that will come along. The Mazur judgment, you get extra points if you're familiar with Mazur, which is essentially a judgment on the rights of litigators within your organization, those who are assisting with litigation. Do they have to be fully qualified solicitors, essentially, in order to conduct legislation? Or if anybody's supporting those who are conducting legislation, is that going to invalidate the process of the enforcement that was taking place. Are we going to see the claims management companies zooming in on that one and saying, well, I've been taken to court, but the person who signed all my paperwork was not a qualified solicitor, therefore throw the whole thing out. So that's had lots of wrinkles going through and ripples going through, not just financial services, incidentally, all sorts of organizations that might be involved at some level with enforcement. So plenty of stuff going on. See if I can change the next one. Sorry, this is a bit text heavy. Challenges for our sector. So I think there's a big problem where the regulators sort of stick collections and debt purchase into the same box as though they are just any other creditor. There's an issue going on now where people forget that the collector, particularly if it's a debt purchaser, will take on the receivable, but doesn't take on the liability of the originating creditor. The regulator seems to have forgot a lot of that, and that's quite a big issue we're focusing on right now. There's some, as a result of that, anxieties amongst the wider investment community about, well, is the debt purchase community actually, does it have more liabilities that are sort of hovering around in the sort of interstices than not? And motor finance is one of those issues where I think we've got quite a lot of work to do on that. Consumer duty regulation is also changing the way that the FCA works. The reason we're not seeing so much in terms of formal enforcement issues popping up on the radar is that the FCA seem to have moved to a more passive-aggressive stance than an aggressive-aggressive stance. In other words, when they come in and see you, they'll use their supervisory powers to say, oh, we don't quite like that behavior, we think you should change it, and then expecting firms to read between the lines and make the changes, rather than necessarily receive a full enforcement notice and react against that. So that's a kind of bit of a culture change that's going on within the FCA. I'm just rattling through a few other of the big challenges that are going on right now. You'll have seen, no doubt about it, social media elsewhere, tons and tons of misinformation, disinformation that is bamboozling customers and also getting them, well, not just confused, but also sometimes confident that because they're a freeman on the land or because they want to pay in something other than sterling or however, and they're convinced because they've seen a legal YouTube documentary about it, this is causing lots and lots of difficulties for both creditors and collections agencies along the way. And so we're trying to grapple with that on behalf of the sector, talk to the Money and Pension Service, FCA and others to see, well, what can we do to counteract some of the misinformation that's out there? Ultimately, we need the public and those who are in an indebted situation to be fully informed and to be confident that the engagement they're going to have is going to be something that helps them, and there's a level of financial education and awareness so that they know what the process is going to be. And that's being clouded quite a bit right now by the way social media is working. I've thrown in the last one here about adverse political attitudes towards collections. It relates a little bit back to the slide at the beginning in terms of the public opinion and attitudes towards collections. Look, most people, I think, mainstream political opinion understands that credit and debt is part of a normal operations of a market economy. But there are those who are perhaps more on the fringes of the political spectrum who can either be deeply antagonistic to credit, to capitalism generally, to the way money works in our society. And so that anti-credit mindset can come along and generate all sorts of media headlines, fuel up campaign groups and so forth. And it's not just on the left of the spectrum, even on the right of the spectrum. You've seen in the States, for instance, there's a sort of populist zeitgeist that can sometimes come along. Donald Trump recently announced whether it will happen or not, but he recently announced they're going to cap on credit card charges of 10% interest APR. That came as a bit of a surprise to the banking sector in the United States, where Trump was working with Elizabeth Warren on the other side of the spectrum. And so, there's a sort of populist mood also that can sometimes cut right across what you might think are carefully constructed regulatory changes to allow the market to function, but within certain parameters. So you've got to watch out for that. And right now, you just have to look at the state of British politics. You kind of get the point I'm making. There are all sorts of players right across the spectrum as it stretches out that could well, in the years ahead, have quite an impact on our sector and the credit sector more generally. Wouldn't be a conference on collections if we didn't at least touch a little bit on the AI issue. And again, many of you are far more aware of this than I am. But it's a revolution that's affecting absolutely everybody. Customers are feeling, in some ways, more empowered because their ability to correspond with you is changing quite rapidly too. We're hearing lots of reports that the customer communications are now so articulate and beautifully formed, which are throwing in all sorts of legal cases, making requests for their data or their deeds of assignment or whatever it happens to be, but also citing even sort of hallucinated legislative cases as those complaints or demands will come in. And even in some respects, in the States recently, there are AI bots that you can use to make the phone call on your behalf to your collections agency and have a conversation, which sometimes you can't even tell you're talking to the AI-generated individual who's negotiating on your behalf, delegated by the customer. So this whole world is really going to change the interaction with the public. But there are some obvious opportunities for improvement, both in terms of internal management and compliance. I've mentioned a few of these here in terms of workflows and record keeping. And many firms now will have very close monitoring of conversations and interactions with customers. But as I say, for customers as well, the opportunities for this sort of serious personalization in the dialogue that's taking place, detecting vulnerability, even in sort of speech monitoring. This is now becoming quite widespread in terms of its use across the sector. And of course, the self-serve evolution is also moving on quite rapidly too. As many of you will know, a lot of younger generation in particular don't necessarily want to have a sort of conversation with a human being. I personally would want to have a conversation with a real person, but to be able to sort out or negotiate your repayment plans privately in the middle of the night or whenever it happens to be through the self-serve process, there's some great things happening, and that can give people the privacy that sometimes they want. Big issue here, comparing the private sector with the old-fashioned public sector. If you want to do this with HMRC or your local council or whatever, you may be waiting a lot longer for that. In fact, there was a recent consultation with the DWP was saying that they firmly believed that only written correspondence by post was the way that they intended to have dialogue with the general public. We slightly highlighted that one as a bit of an odd one, but there's some very antiquated attitudes to some of these things that are out there. And even the issue about email correspondence. 5 years ago, 6 years ago, a lot of call centers would be saying, no, we don't want to take email. They're too random. They're too difficult to understand. They don't fit into a structured way of managing interactions with the public. But of course, AI now can distill and really summarize a lot of quite wide-ranging email correspondence into something that is much more manageable for those who are having the interactions. So things are changing very rapidly indeed. Final stuff really from me, lots of data opportunities that are out there, and data sharing across organizations is also quite an interesting one as well. Making more nuance in the credit files is something that we're looking for as well. One of the issues we have is credit scoring can be a bit clunky, so whether you have an individual who's trying their best to make payments, perhaps doing something on a sort of payment plan and making some progress versus the individual who's just, won't pay and absolutely refusing to engage. That black mark on their credit score can just be the same for those two individuals. And so we're looking for a little bit more sophistication over time if we can press the sector to develop those aspects. As I say, statutory notices, fingers crossed, that's going to be something that could make a big difference. I would say to all of the firms in our sector, please take a look at the public sector a lot more. They have only a mere £54 billion of uncollected debt. And if Rachel Reeves were sensible, she wouldn't just be raising everybody's taxes, she'd be trying to recover what's actually already owed to the government. And actually, the government and the Treasury are very open to working with our sector a lot more. They've asked us to come and help with some of the innovations that they're wanting, that they're open to, but perhaps don't know how that would work. So I would say there's some great opportunities there. And the final point really is, ultimately, what do we need that would transform our sector a lot more? It's better engagement, customer dialogue, having people less frightened, fewer misconceptions, less fear around about what the sector does. And the more we can educate people, the more we can promote financial literacy and get those engagement levels up, that would be better, not just for the customer as well, but better for the sector and better for the credit cycle as well. So that's probably, yes, me, standing between you and lunch. Thank you very much.
I forgot to mention there was a catch box earlier, and there are some questions where people have put their names on them. Where's Eleanor? Put your hand up, don't hide. Yes. Do you want to ask your question from Slido on there?
Don't throw.
I'll come closer. I'm going to throw it from here. Okay. Do you want to? Can I bring up the Slido, guys?
Oh, right, here we go.
Awesome. It's at the top. Do you want to shout it out?
Ah, yeah. Yes, I mean, the bounce-back loans situation is pretty tragic sort of saga, really, in terms of the way the government... I mean, you could argue that in the heightened emergency of the COVID situation, the government just wanted to get money out the door. They designed it in such a way that they reimbursed the banks 100% for anything, whether it was, anything that wasn't paid. But there wasn't really a policy to then take the ownership of those unpaid bounce-back loans into a more structured sort of recovery process. The banks are doing a little bit of that, but because they got reimbursed 100%, I'm not fully satisfied that there is the effort put into on behalf of the taxpayer to make sure that there's good recovery levels that are achieved by those. And of course, we're coming up to now 7 years, so there's this issue about statute bar on some of those things as well. A lot of them are commercial collection issues rather than regulated sort of consumer issues too. I think there could have been, in hindsight is a wonderful thing, I think there could have been a different approach taken to the collections process, but it certainly injected a great volume of cash into the economy when it was necessary. Has it been done though in a fully fair and open way? I think there's still a lot of inquiries to be done into that world. But no, some firms have been involved in that, contracted by a lot of the banking sector. But it's actually been because the reimbursement came from the Treasury to those who did the lending in the first place to 100%. There's not been that incentive to do the recovery as deep as it perhaps would if that were sort of purchased debt as it were. So it's not been something that's really dominated the sector in the recent times.
Cool. Next question from Anonymous. We've got Dave Holton's down the bottom. Can we jump up Dave's, please? Because he's put his name on his. You're welcome, Dave. What changes would you like to see in Consumer Credit Act reform in terms of customer contact, particularly with the digitation of contact methods? Digitization of contact methods.
So I think that there are some benefits to a sort of consumer duty principles-based approach that we should be moving away from the hard, rigid approaches of the CCA, which specifies back in 1974 postal systems and all sorts of things like that. A firm that feels it can have reasonable dialogue by email or text SMS or other reasons like that to communicate information in a simple way should be allowed to do that and make its own risk assessment of how to communicate those aspects of it. I think we have to be realistic in the modern world about terms and conditions and statutory notices, and perhaps one of the main things is that I think firms should be allowed to have the finer terms and conditions details on their website and be able to signpost customers towards those rather than having to send out individual paper-based notifications. That would save a lot of forests, let alone a lot of money for the agencies, which of course is ultimately something that is landed on the customer in the long run anyway. There's no sort of free process in that. So that's probably the main change that we would like to see in the CCA process. I think the first phase of CCA was very much about sanctions that the regulator and the Act had on firms and in their work. And a lot of those went to repeal or revoke. The second chunk of the CCA review process is actually much more difficult to decide about what will land with the FCA's responsibility. And some of the sort of legal brains in the world are saying, well, be careful what you wish for. If you're saying all of this stuff that's currently in black and white statute should be got rid of and just given powers to the FCA, well, you're then in a world where you think, well, who's looking after the FCA? Who's keeping an eye on the FCA's behavior? You might think right now we have actually a fairly sensible, logical Financial Conduct Authority, Nikhil Rathi as the chief executive, and they're pretty mainstream organization. But go back to my political conversation earlier. You imagine that the world of politics changes quite radically. I couldn't tell you who Zach Polanski or Nigel Farage might appoint to run the Financial Conduct Authority if those situations came along. But of course, if there's nothing in statute and you have an FCA which has pretty untrammeled quasi-legislative powers to regulate your sectors in the way that they see fit, that's quite an unpredictable environment to be working in. So there's some people who say, well, actually, you do need to keep certain safeguards, guardrails for the sector, which are in statute as well.
Do you think a lot of those changes that we're looking to try and achieve through the reform will come through? So, I know we're talking about digitisation, but
I think so. I mean, right now, the government are sending out signals that they want to be supportive to the financial services sector because they know that economic growth is being fettered by a lot of the sort of bureaucracy and the treacle that's there. But politics can change. Chancellors can change. Prime ministers can change. And what might be currently a fairly pro-business approach could tomorrow be something that is very negative. We've seen plenty of bank bashing, it's all the financial services sector's fault in not too distant past. And so maybe we'll look at this period of time and think, actually, we had quite an opportunity. I think there are some signs, if we got that Consumer Credit Act reform going through, that could be quite beneficial. But as I say, I'm not holding my breath for it because getting anything through Parliament right now seems to be an incredibly difficult thing.
Yeah, absolutely. Absolutely. Thank you. A question I love at the top. Is there any reason why banks may not outsource debts to DCAs which are CCA regulated?
Yeah, sure. I mean, a lot of originating creditors, and many of you in the room will have your own in-house arrears teams, will do a decent a bit of work with that, but often they can be the first flush of arrears. There's this great phrase about heritage arrears that are more difficult to reach, and that's why often it makes sense for a creditor, without that specialist in-house capability, to spend the time and the deep detail, either on tracing or in terms of dialogue or conversation with customers, to look at getting external support in, to have either an outsourced relationship or a debt sale choice. And those can be quite important because obviously in a debt sale environment, for example, if a book is bought for, a certain amount of pence in the pound, that does give a bit of an opportunity, a bit more flexibility for that debt purchaser to offer the customer greater forbearance and greater scope. Of course, if the sector is sort of lacquered with costs and regulation and even other unknown liabilities, redress liabilities or whatever they happen to be, then the scope for forbearance will reduce. And so actually it's not in the customer's interest if the government and regulators take that approach as well.
Yeah, agreed. It's an interesting one. I mean, we're a DCA, as you guys know. If you're not outsourcing to us yet, come speak to us. What role do you think the media plays in how the collections industry is perceived, and how does that impact the industry as a whole?
I mean, there are some big names out there. Mr. Martin Lewis, amongst others, will be often setting the agenda for these things. Actually, we've got a relatively good relationship with his charity, for example, Money and Mental Health Institute, which does some pretty good work as they go across different areas of policy. But sometimes you do get misconceptions. There is unfortunately still that perception of the debt collector, out on making demands on the doorsteps and all the rest of it, and it is very far from the reality of the sector. And as I say, it's hard to shift a lot of those misperceptions that people have, but we will keep trying to do that. Because there's a need to do it. And as I say, the public do actually, at one level, understand that this is a job that needs to be done. But you've got all sorts of television programs and things that make it kind of slightly more edgy, and they don't always help the image of the sector.
Yeah, agreed. Got quite a few more on here, so maybe ask one more if that's okay with you. So. Last one. Do you believe AI will take over the standard advisor's role when dealing with collections?
Yeah, I mean, this is, as I say, we have 10,000 employees across the UK at present. There's a big question about how far firms are going to go to take out some costs and replace with automation. I think there's going to be a little bit of a limit to that, because I think customers will always want to have the type of service that they feel really clicks with them and is meaningful to them. Some customers will want to just get the transaction done in a neat and simple way, and perhaps AI can release sort of personnel time from the more mundane kind of transactional activity to the more specialist conversations that are needed, particularly when it comes to vulnerability and dealing with more complex personal circumstances. So I think there will be some change. I think there will be a certain amount of reduction in headcount, but I don't think it will be as drastic as the whole sector moving away. Certainly the technology isn't in a position to convince people of that. And of course the FCA, everyone's favorite, they're already on this in terms of a big review of AI in financial services. Sheldon Mills, catchily titled Mills Review, that's underway when it comes to AI. Another bit of regulatory sort of work that's going on. And are they going to start to set out some rules about what AI ought to or ought not to do? Are they going to start to specify the type of conversations that are or aren't appropriate with customers? So that's in the air at present.
Yeah, agreed. I think it's an interesting one. I don't foresee AI taking over people's jobs and suddenly loads of redundancies. I think it helps support some of those functioning volume-based tasks that you maybe can't get through on a day-to-day basis. That's really interesting where the industry takes forward. Chris, that's been a real pleasure. If I can send some of these questions to you, maybe you can get them answered afterwards. Perfect. Thank you very much, Chris.
Thank you.